This is Ken Kraetzer for CBSIServices and our Talking Business interview series. We talk to leaders in the field of digital marketing, in direct marketing, banking, insurance, customer service, and business education, all to highlight the great work being done by our team at CBSI, taking care of our customers. During this whole year of pandemic, CBSI provides insurance-based benefits, often travel and merchandise related to the payments industry. Now, we are very pleased to have two experts in artificial intelligence, predictive analytics, actually applied to fraud detection, and that is Frank McKenna, who is the co-founder and chief fraud strategist for Predictive. And he is based out in San Diego. Frank, how are you today?
Doing great. Thanks for having me.
Our pleasure. And then we've got Dennis Behrman, who is based down in Dallas, Texas, and he is the VP marketing of the company. Now, let's start with Frank. Tell us a little bit about why you decided to start Predictive and a little bit about its growth so far.
Yeah, so about 3 years ago, my partner, Tim Grace, and I decided to start a company that could focus on an area of fraud that we felt wasn't being addressed. And that area of fraud that we wanted to focus on was auto lending fraud. If you think about the auto industry, it really contributes a lot to our gross domestic product as a country. So it's a really important part of our economy. When we started to look at the auto lending industry, though, we started to quantify what we thought was a great deal of fraud that was perpetrated on applications, either by consumers walking into the dealership or the dealerships themselves. There's about 35 lies that consumers or dealers can tell on an application that an auto lender wouldn't know anything about unless they had some sort of technology to help expose those before they fund the loan. So we started the company to use artificial intelligence and data to help flag auto lending fraud for lenders before the fraud occurred to save them money. By our estimate, there's about $7.3 billion in auto lending fraud each and every year that lenders or dealers are losing because of lies on applications. So our mission as a company was really to try to help target that and help the lenders reduce those losses.
That's an amazing number, $7.3 billion annual fraud losses just on auto loans. Now, we want to get back to that, but let's hear from Dennis a little bit about the products and services, and again some of the business markets that are utilizing the Predictive service.
Yeah, absolutely. So, as Frank mentioned, we tend to serve the auto lending market, but the magic of the technology is that it can be deployed on a wide range of, let's call it schemes or scams that can affect lenders of all types. Synthetic identity fraud has been a growing problem for nearly 2 decades now. And we have a very, very effective technology that can detect the application of synthetic identities on loans. But the real special stuff to me are the things that help lenders deliver a great member experience. We're able to detect a wide range of suspicious things on loan applications. Frank will get into more of this, but power booking schemes, all sorts of stuff you can do with, suspicious stuff you can do with collateral on a loan. And then the very, very difficult to detect problem of almost professionalized services that help consumers get approved for loans when perhaps they probably shouldn't. So I'll let Frank get into some of those great innovations. But it's an absolutely thrilling company to work for. I'm working with 40 of the smartest people I think I've ever worked with in my career. So it's a great place to build great tech, serve the financial industry that we all love, and do some good in the world with it.
Very good. Now, Frank, I just want to get back to what you just talked about, the $7.3 billion in annual auto loan fraud. And from what you've mentioned, it's been getting worse actually during the year of pandemic. And also just as the business has evolved, there's, used to be in a major loan, you would actually have a meeting with someone, with a salesperson or a credit officer and a dealer. And that doesn't always happen anymore. Tell us a little bit about the reasons for why fraud is reached $7.3 billion a year in auto loans.
Yeah, if you look at the problem of auto loan fraud, and especially over the last year, and you brought up a great point, which is, at one point, the borrower, the dealership, and the lender would all work very closely, and you'd see the person face to face. What happened over the pandemic is the economy locked down. People were forced to stay at home. It created an environment that's rich for fraud because everything was not face to face anymore. So in auto, for example, borrowers were not going into the dealership, they're actually applying online. When they did go into the dealership, they would wear a face mask, so they couldn't necessarily be easily identified, and it was a very short meeting. They get handed the keys to the car, 5 minutes later, and they could drive off the lot. You can think how appealing that is to a fraudster who wants to remain anonymous. They can do everything behind their keyboard. They can steal information off the dark web, apply for cars, go into a dealership, not even show their face, and walk away with a $25,000 car. Now, they could either keep that car and drive it, or they could put it in a shipping container overseas and sell that car potentially for double or triple that amount, 50 to 75,000, and make a lot of money very quickly. So what's happened over the last year is a growth in identity theft, which is basically stealing somebody else's identity, or what we call synthetic identity, where you actually steal parts of identity and put them together into what we call a Frankenstein identity, which is using various different people's names, date of births, social security numbers, and you're creating brand new identities that never existed yesterday. So
wow.
The industry is really grappling with a lot of this fraud that's ever changing daily. So that's where we've been busy, is uncovering those patterns and investing a lot to help lenders identify all those emerging patterns that are rising day in and day out.
Well, I've got another thought, but I want to ask Dennis Behrman, the VP of Marketing at Predictive, about the survey that you recently did on 2020 auto finance fraud report. Tell us a little bit about what your findings were in that, and what those who see it, your customers, will learn from it.
Yeah, absolutely. I look forward to Frank providing some of the detail. But basically, our lender consortium, which now encompasses some 94 million recent and historical loan applications in the auto space, is a treasure trove of data to pour through to see the impact and see how lenders' portfolios are exposed to the various types of fraud and misrepresentation that happened in 2020. We do this report every year. It's extremely anticipated. In fact, our several dozens of customers are often banging on the door for it. But the big findings in this year's report, and I'll turn it over to Frank for some more detail, was that yes, indeed, fraud and misrepresentation has grown, and there's more loan value being exposed to these schemes. Number two, there was a growth in income and employment misrepresentation on loan applications, which was mostly driven by the effects of the pandemic, but also some convenient technology factors. For example, our company posted a video to YouTube that showed just how easy it was for an enterprising young fraudster to, for example, fabricate a pay stub to be able to substantiate a level of income to a lender that doesn't really exist. So that type of fraud and misrepresentation has grown. And of course, all of the types of frauds, Frank mentioned synthetic identity, there's things that can happen with dealers and collateral and power booking. All of these types of frauds are growing more prevalent, almost mandating very, very advanced and sophisticated technology to detect this stuff.
That's really something, you know, there's a lot of discussion going on about identity for various reasons. We've heard some solutions on that, you know, biometrics as a possibility. But Frank, why don't you tell us a little bit more about what you have in your report, what you learned from it, and I've got to get back to synthetic identity. That's a new term for us, but it sounds like it's so important to be aware of.
Yeah, so if we think about the report, I think Dennis keyed in on the big changes. So what we saw was, you know, a 124% increase in the frauds that our own fraud analysts were detecting. We saw a 300% increase in the use of fictitious employers provided on applications. We saw a 25% increase in volume coming through, suspicious volume coming through to dealerships where the borrower was a significantly far distance from the dealership. That's often an indicator of identity theft. We saw about a 12% increase in synthetic identity. And since you asked about synthetic identity, I'll just kind of tell you a little bit about it. Synthetic identity is America's fastest growing financial crime. And that is an FBI statement. So last year they came out and said the fastest growing financial crime here in the US is synthetic identity. And the reason why it's growing so fast is because of so much digitization and automation. So essentially what a synthetic identity is it's a way that consumers, scammers, and fraudsters have found to fool the credit bureaus into creating brand new credit reports. So for example, you know, Frank McKenna, you know, I've had credit for the last 40 years using my name, my social security number, my address, and my phone number. So when I apply for credit, they take my application, they match it up against the bureau, and they will find my record. If I went out there and said, my name isn't Frank McKenna, it's Frank Smith, and I live at a different address, and I just used somebody else's social security number, and I applied online, when you go to pull the credit report, it's not going to match to me. It's going to create a brand new identity under Frank Smith with that social and that different address. So what that means is that people are able to, rather than steal an identity, you don't have to do that anymore. You can simply make up a new identity and you're off to the races. You can apply for loans, you can get cars, you can even get homes using a synthetic identity if you're smart enough. So it's a type of fraud that has growing by leaps and bounds. And I'll give you a stat here. In the US, if you want to steal identity, you've got about 330 million adult Americans that you can steal an identity for. However, by using different combinations of names, addresses, and social security numbers, there's 4 quadrillion combinations that you could do to create fabricated synthetic identities. So the numbers are limitless in terms of these synthetic identities. Fraudsters can create synthetic after synthetic after synthetic and never get caught because they're just creating new combinations.
Well, I was actually recently on a call with the Independent Community Bankers of America, and they had Senator Joe Manchin on from West Virginia, and he talked about the need for tightening things up regarding identity theft, and cyber, and is there a remedy or direction? Is there just got to be an element of a physical piece of paper or a meeting between people on these larger loans that you see? What do you see as the area of remedy?
There's no silver bullet. I'll say that. There's a multi-layered approach. The first approach is what we do, which is we can identify synthetic identities instantly by looking for about 25 different patterns on an application. Because we have so many applications in our database and so many examples of synthetic identity that have occurred, if you match to one of those 25 patterns, we can flag it to a lender, and a lender can then take some preventative action. Typically what they're going to do, they're going to request the driver's license or the social security number of the person submitting the loan so that they can verify it's real. So the first remedy is scan it with a solution like Predictive. The second is document validation through, your identity or your documentation. And then the third is a new solution launched by the Social Security Administration, where lenders and banks can actually go to the Social Security Administration, send the name and the Social Security number to the administration, and the administration will tell you whether that Social Security number belongs to the person or not. And so you can directly validate that social right from the source. And those are the remedies that most banks and lenders are kind of gravitating towards and using today.
Wow, I still have my Social Security card in my desk here in the home office, and boy, have things changed on sophistication from going digital. Dennis, maybe a final thought about your services and some of the markets that can utilize it.
Absolutely. My pitch to lenders is really simple. I mean, in the financial services industry, we're dollars and cents people. We talk a lot about hard numbers. And I think one thing that I can say to lenders about Point Predictive and our technology is we can prove out the value in hard dollars and cents. Any lender that wants to explore the benefit of using technology like ours can participate in a retro study that's guided by Frank and his team, and they can look back on their portfolio and do a what-if analysis to see how much fraud would I have stopped? What kinds of fraud could I detect with the technology that I'm unable to detect with my current resources? And how many more loans can I streamline and accelerate to funding because the technology has helped dissuade any concerns that there's suspicion on the application. So for me, it's a very powerful technology that's supported by hard dollars and cents. And we invite lenders to come in and take the Pepsi challenge with our technology. We're very, very confident that lenders come out of this ahead when they apply sophisticated technology like ours.
Very good. And Frank, maybe a final thought on the report that you have available now, and again, how this can help lenders in the auto field and other related areas.
Yeah, so for us, producing the annual auto lending fraud report each year is all about education. So it's about educating consumers about the risks they face. It's about educating lenders and car dealerships, because from our perspective, fraud is about understanding. It's about collaboration, everybody working together to identify it. And then it's about proactive use of technologies to counteract it in the future. And so that report, I'd encourage everybody to reach out to us if they want to look at a copy of the report. It's very enlightening. It's about 35 pages of in-depth statistics, the most in-depth report you'll find on auto lending fraud probably in the world, because that's what we specialize in. And so I'd encourage people to reach out to us, and we'd be happy to talk to them all about what risks are out there.
Wow, well, we appreciate the chance to talk with you both and learn about this, the application of artificial intelligence to try to prevent auto loan fraud, which now, as you said, reaches over $7 billion annually, and new patterns due to the pandemic. Hope we can stay in touch and learn more about this down the road. But want to thank you, Dennis Behrman is Vice President of Marketing based in Dallas for Point Predictive, and Frank McKenna, who is a co-founder and Chief Fraud Strategist at Point Predictive. Thank you both for sharing this important story.
Thank you, Ken. It was a pleasure.
Our pleasure. Good to see you both. And again, it's Ken Kraetzer for CBSIServices. We're based in Harrison, New York. We provide insurance-based benefits to the credit card and payments industry. And I'm based in White Plains, New York. And good to see everyone. We look forward to another episode very soon. Have a good day.